Welcome to all of you. Today we are going to look at how to identify the top and bottom. Now most of us would like to buy at the bottom and sell at the top. Okay. So first of all we must understand that how does the pattern gets formed and at what time first we can get alerted towards that, because exactly buying at the bottom or the top, selling at the top, you have to go against the trend, right? So sometimes it may work, sometimes it may fail, for which also you can put stop loss, but you have to wait first to get alerted and become confident to buy. So where does the confidence come? The confidence should come based on drop in momentum. So the first thing that everywhere what should happen is, whenever there is a phase of decline, we should allow that phase of decline, the momentum to fade, because suppose let us say in a couple of days the market is falling by 2% or 3%. After that, for the same time, it may take only just 1% fall. So for first 3 days, let us say it falls by 2%. Next 3 days it falls only by 1%. That means the momentum is fading, right? So decline may happen, but the momentum is to fade. So first of all, we have to wait for the momentum to fade. Then after that momentum fades, we should be on alert as to where we should buy. Now that you can use either some indicator or what we discussed yesterday regarding higher tops, higher bottoms, or we can use Fibonacci, all those things. So first of all, let us look at how do you identify the bottoming and top. Now one of the indicators is the MACD, which is also can be used both as a trend indicator, can also be used as an oscillator indicator for identifying divergences. So the most important thing for identifying the top or bottom is to observe the price oscillator divergence. So divergence is very important to identify top and bottom and become confident about our position. When we say divergence, what we are saying is the price should keep going up. Let us say the price goes up, but say RSI or MACD, it also moves like this. Then after that, it just goes up like this and comes down. That means a new price top is formed, but oscillator does not form a top. Oscillator starts forming a lower top. So a higher top in price, but a lower top in oscillator, in RSI or MACD or stochastics, whatever it is. So that will give the first confirmation that we should be on alert to go for a buy or sell. And after that we can look towards some sort of an indicator to allow us to make that particular decision. Okay. So now similar thing in the bottoming out process also, the price may decline. Price may decline like this, but at some stage the indicator will be like this. So when it comes like this, a new bottom is formed. But whereas the RSI will not form a new bottom, RSI will have a higher bottom. This will have a lower bottom, price will have a lower bottom, but oscillator will have a higher bottom. When that comes, we should be on alert. Okay, so let us look at it in the chart itself. Now, this price divergence thing can happen in hourly chart, daily chart, monthly chart, all those things. So the longer time frame when it happens, then it is supposed to be more effective. It's supposed to be more effective. In the lower price period of divergences, we can either look for intraday or for a couple of days of position. So we should look at, if you're looking at a few days of position, just to capture 1-2% rise or fall, then we should look at the hourly pattern. Suppose if you're going for a slightly longer period of investment, you can look at daily. And monthly and other things, you have to be very, very careful about it. Okay. So intraday you can look at 15 minutes time frame divergences, which happens in a 15 minutes time frame before you jump on for a buy, or you can even look at a 5 minutes time frame, depending on the times you are willing to allocate and the resources that you are willing to allocate. So let us straight away look at the Nifty chart. We'll also look at some stocks. Now let us try to identify now the bottoming out process in an hourly chart. Similarly, topping or bottoming out pattern in a bigger time frame chart, which could be daily, weekly or monthly. Now let us look at the Nifty chart. Now this is Nifty hourly chart. The reason why we are taking an hourly chart, because you may get a more important divergences in an hourly chart compared to daily chart. Now let us say the recent price action, the last couple of days price action. In an hourly chart you can see now the price is just moving up, but not moving up with great energy. See, to the extent that it moved up here, that energy is simply not there. You can see the MACD along with the trigger point, it's just hovering around the trigger. So that is the first instance that probably is giving you an alert. Then you can see in the RSI, you can see very, very important divergences. See here. Now the price has moved to new top. Okay, today it went up to 19,450, 460 levels. Okay, but here if you see the RSI in an hourly chart is not moving up. In fact, our RSI in an hourly chart is making a divergence. Similarly, MACD is also not moving up. In fact, it is slightly below the trigger point, right? So that is a very clear thing right now with the MACD below the trigger point, but price has gone up. Similarly, RSI is also below its moving average. So the price is up, which means very clearly that the market is getting tired. Okay. That does not mean we should directly go for a sell, okay, because sometimes you may have some divergences, but at the same time the price can still keep moving up. So we need some confirmation for the price. So now we have first recognized the topping. So the first question, first thing before us, recognition of top or bottom. So recognition of top or bottom. This is the first stage. Then we can look at what level we should, what level to short or long. What level to short or long. Okay. Then of course comes the stop loss, profit target and all. So this is a trading plan. Okay. So one of the important points that we have recognized first is recognition of top bottom, okay, in the trading plan. Now we have recognized, in an hourly chart we have recognized that yes, from now onward there is a chance that Nifty can fall. Now having identified what is it that probably where should we go for a short. Now we can use many ways for doing it. Of course we can use this particular level because this is an hourly pivot, important pivot. So this is 19,329 and 19,329 is also the last 2 days, or I think 329, yes, it is 2 days low. It is 2 days low, right? So 19,329 fall below 19,329 probably can indicate that market has stopped out, because if you see, generally speaking, no, the market generally doesn't have much of a normally most of the traders either go for a 2-day stop loss or a 3-day stop loss. Now the 2-day stop loss is now called 19,329. Tomorrow if it doesn't fall below 19,329, then day after tomorrow the fall will be below 19,329, will become a 3-day fall. So 19,329 now is becoming an important trailing stop loss, at least for first, or at least it becomes an important trailing stop loss. Now we can also look at the Fibonacci for this. So from here, if we draw from 18,835, it has already come. See now, you can see, okay, 19,318. So the first 23.5% retracement comes at 19,317, 318 right now, right? So around that level, market can stagnate for some time, and then after that it may start to rise a little bit, and then if it starts to fall below the 19,318, I think the overall trend at least will now move into sort of a sideways motion, or probably we need to look at again a new phase for re-entry. At least we should get out of our long positions and then look for a new entry at later stage. Okay. So the trading stop loss now is becoming 19,318 or 320 levels, because that also represents something 140, 150 points from the top. Okay. So either we should look at that particular place. Suppose if you feel that it is a little higher, that we should look much higher, then let's look at the hourly chart and look at the See, this is the important low, which is 19,329. So we look at the retracement from this level itself, 78.5%. It comes to 19,350 level. So the worst situation that we can look at is 19,350. So that is 78.6% retracement. So 19,350 can also be a very important place from where there can be a swing change. So mark for the 19,350 itself. So it may not come up to 19,329. It can go up to 19,350. And then from there it can also have it below 19,350 and then fall to some level which probably could be a trend line support or whatever it is. So right now we are looking at 19,325 and 19,350, but the alert has been given because of this place. Now there are if you feel that you should even get out of this position a little earlier than what has been done, then in that case we should look at this place itself. It says 19,404 because it is an hourly bar low here. So it is slightly less conspicuous compared to this, but we can even go at 19,404 because that could be the today's low. Let's say today's low 19,401. So we can also, because if 19,401 is taken off, then in that case we may have some fall. So we don't need to wait for 19,329. We can even look at today's low itself as a trailing stop loss, 19,401, because of the divergence. So whenever we get a divergence, then in that case we should look at a particular day's high low itself as a important trailing stop loss. Now let's look at this particular time period. So hourly chart. Okay. Now see, we will look at this particular period. See, this particular period, you can see a divergence here in MACD also. So normally if you get divergence in MACD, it's very important, more than RSI. See here, you can see price action here. A lower bottom is formed, but MACD is not forming a lower bottom, right? So MACD is forming a higher bottom. So in case where the MACD is forming a higher bottom, in that particular case, then in that case we should be at alert. So where we should look for a buy is where now we have to decide, and probably you can look at this place. So the 23.5% retracement, for this. So 19,539. So 19,539. This is a 19,343. So it will look as if this is quite big. I mean, we can't make an entry at this like this. So we need a much smaller entry position. So we remove this and see what best can be done. Now let's look at this particular hourly pivot. This place which will be cut or a gap up. So probably this particular place 19,429, or we look at the daily place here. So this is the place where we got the in the hourly chart. This is the place where we got a divergence very clearly. In that case, we can go long above 19,457 itself without waiting for any other big trend change place there. So here itself we can go long above 19,457 and ride this particular wave up to 19,849, almost 400 points we got. So when you identify a divergence, then we should get on board at the earliest. Okay. So this is the place where no, the above this, and also the pattern was also confirmatory because you got though is not a squat bar, but you got a very deep low, that is very long shadow. If you look at the candlestick, so this looks like a doji pattern and a long shadow candle. So in that particular case, we can go long above this place itself. Now, you look at this today. It's a very small candle, something like a doji, some indecision is coming. So we have seen the divergence is also today. So now our topping out pattern now is 19,401. So we should put in the stop loss, trading stop loss at 19,401 itself because of this candlestick pattern as well as the hourly divergence. Okay. So let us look at this chart at a bigger time frame. See, monthly chart, when you look at it, see this time the overall, this particular compared to this high was good. Okay, it is higher. But look at the MACD, it is not showing much of a great enthusiasm. In fact, it is just crawling around the trigger point. That means there is no big trend like this. So here, if a trend is like this, then the MACD line and the trigger line should be apart. Now here, if you see, it is not so. So that means on the monthly situation, we need to be quite careful about it. And also because of the divergence that has already taken place. So we have to be circumspect as far as the monthly chart is concerned. So we should be alert. Any trading position, we should be quite alert of a possible change that can be there in the market itself, because it has also broken a 3-month low. So any rally, we need to be quite careful about it. So we need more and more confirmation before we get on board. Any long position that has been created at the bottom levels, when it started rising from 18,850, maybe might have got on board above 19,100 or 200. Those positions, we should be careful to make an exit at 19,400. Then wait for a slightly bigger dip before we reassess the situation. Now let us look at Bank Nifty or Nifty. Nifty Bank. Okay. Now this is monthly chart, so we are not. So in the monthly chart, MACD line is below. Okay, below the trigger point, which itself means that this is a very important top. 46,369 is an important top. Okay. And let us say right now we will look at the daily chart. Okay, daily chart. If you look at it today, the close is below the previous day high. Which means that the strength is fading. If the strength is good, then the close itself will be above the previous day high. So that is the most important thing. If the close is above the previous day high, next day you can even go for intraday buying. But in a situation like this, we should not. Say for example, this particular day, close is above the previous day high. So we can go for a long call on any next day dip. Similarly here, you can go for a dip. Okay. Now this particular day we can't go, next day we can't go for a long, mainly because of this reason, because it closed below the previous day high. In this case we can go. See in the year, if you look at it, the close is above the previous day high. So the next day we can even look towards going long. But right now the market, though it is looking like going up, just look at the way it is going up. So that itself is not very inspiring. Small red candles where the close is coming very closer to the open levels, and no clear decision, though the movement is there, it just jumps, but not much of a movement on an intraday basis. So we need to be careful about this. So let us look at the hourly chart for this. Hourly chart clearly shows divergence. See, there is a clear divergence here. If you look at this, this particular one, so the RSI is not making a new top. Price has made a new top. So we need to be careful about this. So either we can do a stop, we can draw a trend line and see where it ends. Okay. So this particular line, if it starts dropping, then in that case, no, if it starts declining below this line, then probably we should be out of our any long positions that we might have created at the bottom. So at this place, we should be careful about it. And see the earlier positions of long, which might have created at any of these levels, we should now look towards removing. At the same time, we can also look towards selling. So where do we sell? Either we can sell at this place itself, that is below this low, which is 43,550. 43,550 itself is a place where probably we can look towards shorting our position here. Okay. So based on this, I think it's a very clear indication that we should be looking towards a short below 43,550. So even if you want to create a short position, I would suggest that you can create, that is, remove your trading long position and create this. Now this is based on this thing that there is a topping out pattern here, and the topping out pattern has been identified because of the divergence between the price and the indicator. Okay. Now the same thing could have happened previously also. So let's look at this place. Now you can look at in the hourly chart, you can look at this place. So here price has gone down, but RSI indicator is above and MACD is also above. For example, say let us say in this case. So here just see on the price chart, the trend line is coming down, but whereas in the case of RSI, it is up, this place. So this is a divergence. So based on this divergence, we should be ready to look towards position for the for going long. So that can be done by either this is a trend line. Okay. So once this trend line is broken, and in this case we can go long, keeping this low as a stop loss, keeping those low as a strong as a stop loss. So now in the present case it is like this. Okay. So based on this, I think we should be looking towards identifying the topping and bottoming pattern through divergences, and then picking up the entry point based on either a Fibonacci or trend line or some pivot point break or a day's low, high low. So we should use this, and as suggested yesterday, one particular bar, whether if you are doing it on an hourly chart, it should be only on one particular hour's high low as a stop loss. Similarly, if it is day, it should be like that. So we should minimize our possible losses also and let the profits run. Now we will turn our attention towards the one or two indices, then look at the stock. Nifty pharma companies have delivered stellar results this time. So let's see whether we are able to get anything in pharma index. Yeah, so let's look at the daily chart first. The daily chart, if you see, it broke this particular line. So this is a very conspicuously a very dangerous place. But this got broken. This got broken here. Okay. So I think right now it looks as if this is a correction and this correction is over. So we are looking at one particular rally which is there. But probably I still feel that no, this is going to be a topping out pattern. This is going to be a topping out pattern. Why? It is because this rally which is taking place now can go above this high, but we have to see whether the RSI or the MACD is going to go above this. So we will see definitely a divergence, and probably the pharma index is likely to make a top very shortly. And that particular top can come, let me say, I would put it this way, say let us say this place is 12,000, 12,040 and 15,750. So 3,750 plus 14. So 15,990, 16,000, mark this. So there is around 15,990 or closer to 16,000. Very good chance that it can top out. Only an extended rally possible, but I think we have to be very careful when it starts moving above the 15,990 to 16,000. Good chance that it will be topping out slightly at around 16,000, or if it goes a little higher, it could be 3,570 into 0.618, 2,200. So 2,200 maximum. So anywhere between 16,000 to 16,700 it can top out. So mostly 16,000 if we keep, we have got a chance up to another 500 points of rally is possible. 500 points of rally which is possible. Around 2 to 3% is possible still in Nifty Pharma. So anybody who wants to take a call at this place should buy on any dip closer to the 15,000 levels and then make an exit closer to 16,000. Because if you see this particular pattern which is here, we feel that this is 1, 2, there is a third, and this is a strong, this was a corrective move, and above this we will see the Nifty Pharma index topping out closer to 16,000 levels. Now let us look at the, in the same case we look at the hourly chart, what happened here. Now if you see, this was a, we didn't see much of a great divergences in the hourly chart. We didn't see any big divergences in the hourly chart. So very difficult that to pick up the bottom here. To pick up the bottom based on the oscillate drive, because we cannot use only one tool always to identify the top and bottom. Divergences is one important factor. So not necessarily that every time a divergence has to come for us to identify the top or bottom. Okay? That is one factor. So the other factor is that you should look at the normal trend. We should look at the other patterns that we have already identified, and based on that we should move ahead. Now in this particular case, let us say a monthly chart. So Nifty Pharma, this is, it has not broken 3 months low. So just look at it. It has started to move above this. So 15,541. So 15,541. Since it has started to move above this, we should be quite. We should be long. We should be long based on, because there is a corrective move, and that corrective move has been nullified with a new top being made above the corrective bar. So that means on the monthly trend, now we have started to move up. So Nifty Pharma above 15,540 is heading towards the 15,990, 16,000, or we have to see whether it is going to even gather further momentum above that level. So right now, yes, Nifty Pharma looks good. Now let us look at the Nifty mid cap and small cap. So Nifty mid cap also, it is looking good. There is the same thing like Nifty Pharma. It is also now going up, but probably we may see this is area 29,200 and 29,200, 41,686. So 12,486. So in that 0.386 times we can keep 4819 plus 37,655. So 42,474 to 43,000. Okay, so there will be we have to be careful about that particular level, because this is going to be important. This particular rally can make one top and then start coming down. So this is a rally on which a profit has to be booked. Because now if you look at the of course the on the monthly index and all, there is no divergence, but let us look at the weekly. Okay. So weekly we have to be quite careful. Now the MACD index is still below the trigger line. RSI line is also below. So even if there is going to be new rally, probably we may see a divergence in the weekly. So please keep observing that for a possible topping out, bottoming out in a weekly basis. In a daily basis, of course, now we are having come below to around 29 and 30 levels in the RSI. It has started to move up. But this particular move which is taking place could probably be at this moment, yes, it's still a long. Nifty index, small cap, mid cap at even 40,440. There is a chance that we may get another 5% rally also, 5% or slightly more than all also. So at this moment, yes, it is in a long position like Nifty Pharma. I think we have got we can buy on any dips towards 39,630 or 640. We can make a buy, and on any dip, and probably we could see something like a 42,470 or slightly more than 42,470 before a significant correction steps in. Now let us look at the individual stocks. Now let me say Reliance, the biggest stocks, Reliance, ICICI, Titan. Then we'll go to some mid caps. Okay, Reliance on a daily chart doesn't look great. It is small bars are being made. There is no big bars here. So we need to be careful about the Reliance. I think probably any drop below this level, which is 2319, 2319, anything below 2319, probably we need to take our profit and even look towards short. So you can sell below 2319 and keep 2340 even as a stop loss. Now let us look at this hourly chart. What happened? Okay. Okay. In an hourly chart, we had in RSI, probably it was not coming down, whereas the price was coming down in an hourly chart. So if that be the case, we should look towards any particular day's I breakout itself. So let's look at this. Okay, this particular breakout, which is 2258. So we could have gone long about 2258 with a stop loss at 2220. So there itself we could have gone long without waiting for bigger patterns to develop, where probably we may where the trend would have got evaporated. Suppose if you go for a long somewhere above this level, that is higher bottom level, by the time it is already 2317. So most of the time right now in these stocks we have to look at the hourly chart divergences and then get on board for a decent profit. So here we got the hourly divergence, which enabled us to go for a long position here, keeping this low itself as a stop loss, Now you see an hourly divergence here, so we need to be careful about it and probably look towards making an exit first of all, trailing stop loss. So if you look at this, this one was there, and all these places we are now getting divergences, right? So divergences. So even hourly chart, any break below this, and right now this break. So 2320. So anything below 2320 itself, I think we should be looking towards exiting our position. Now let's look at ICICI. ICICI Bank. Okay, now hourly chart. Look at the hourly chart. There is a divergence. RSI divergence is there. New top, RSI divergence is there. MACD divergence is also there. So let's look at the daily chart. Okay. So now any break, either this or this. Okay, 930 break. So because we can even short below one particular day's low, which is 934. Since the previous day low is only 930, we can look towards shorting ICICI below 930 and put in a stop loss of 950. So this is confidently done based on an hourly divergences, which is seen in the chart there. You see in there. Okay. And on a daily basis, probably the stock is in a very big consolidation phase, and not much, because I think probably for a very long time, for the last 5-6 months, It has neither moved up above 1000 nor fallen much below 910, 910, 911. So next dip, which whenever it happens, we have to be careful. There is a chance that on a daily basis, the next dip could form our divergence in a daily chart itself, which will be a good potential level to go for a big position. Right now, it's a trading position call. Okay. Whatever we went long, right now we can look towards exiting the position. The long could have come here above this particular level, which is 917 with a stop loss of 899. Now that position may be getting dropped at this place. Okay. Now let's look at slightly bigger momentum stocks like Titan. So Titan on a daily basis, there was no divergence. See, when the price made a new top here, when the price made a new top, we didn't see any divergence here. The oscillator also was looking good. So that means any correction, and also the trend was good. So any correction, we can still go for a buy. We can still go for a buy. Okay. So in that particular case, since now we can even go on a contra. In this case, you can go for a contra, and contra can be done on a basis of Fibonacci itself. Now look at this Fibonacci. So 50% and 61.8% came closer to 3056. Okay, 3075. So it came closer to 3075 and started bouncing. So 3056, 3075, we could have definitely looked towards going long based on this. So this was a very important low. So based on this important low, whenever there was a fall here, we could have gone long, keeping this particular low 2984 as a stop loss. 2984 as a stop loss. Now let's look at this chart right now. This is, suppose if it starts to go up, and then we don't get any divergence in the chart, there is a good chance that we may see some divergences, because now itself, if you see this particular aspect, so this was 1, 2 here, and this itself is a very important thing, 3349. So closer to 3349, 3350 itself, we need to be quite careful to see whether there is any divergences coming in MACD chart, because the stocks are moved up significantly, but MACD is still not exhibiting the same sort of strength like the price. So once it starts to clear this 3350, look for the divergence either in the in RSI or in the daily chart. So there probably we need to be quite careful and look towards making some exit, and then look towards buying again at some lower level. Right. So now we look at some other let us say mid cap stock like TVS Motors. I don't know why it is hiding right now. Okay. Now this is TVS Motors, and let's look at the indicators. We'll put the MACD alone. So there is some problem. So okay, now we have got it. So we can see the MACD chart. This time when it moved up, so this is not a high. This is an important high. Okay, so when this important high is made, MACD did not show any divergence. MACD did not show any. That means you can be quite confident of buying on dips. So the moment it comes to say this particular support resistance levels, you can look towards that buying. Or probably, so the contra position will always come. Contra position we can always use. Okay. So contra position we can always use if we have not seen any divergences. So here, if you look at it, since we did not see any divergence, we could have gone long on any dip which is either 50% or 61.8% retracement, we could have gone. So right now, yes, I think it has started to move up. Look for any divergence. If there is no divergence, then you can be confident of buying on dip. So when can we apply contra? That is, when can we be confident of buying on dips? We can be confident of buying on dips when we have not seen any divergence in the previous top between the price and the oscillator. See here in this case, the oscillator and the price both have made a top. Okay, so there was no divergence. So when there is no divergence, you can keep buying it on dips. The TVS Motors now I think is still a confident thing, but buy on dips. Already it has gone up. We should have bought somewhere. So this is a higher top, so we should have bought somewhere here. So a couple of days back, we should have bought about 1574. Now that's over. Okay. Now let's look at some of the top firing stocks. We look at the RECL, Rural Electrification Corporation. Sorry. Okay. So here is the same case, not much of a not a conspicuous divergence. There was some divergence on the daily chart, but it's okay. I mean, like it's not deep. It's not deep. So probably you could always look at whether to buy at this particular level on dips. We could always have looked at it. So RECL is one stock which is doing extremely well. So there, if you just look at the divergence, now also there seems to be some divergence is coming up, because if you look at the chart now, let us say. So this is this trend line. This trend line can hold. This trend line can hold. So once this particular level of resistance is there, then in that case, no, we should be careful, because this is a new top has been made. A new top has been made, but MACD is not making a new top. So in that particular case, we need to be careful. That means any low, see, that is 3 days low or 2 days low, you should put a trading stop loss for a long position. So right now, RECL should carry a trading stop loss below 300. So though it has gone up to 312, right now you should be careful and put in a stop loss below 298 or 299. Last 2-3 days low, you should be careful to put the stop loss, and then on any bigger fall, we can always look towards buying, because if this is going to be an important low, probably it can have a dip which comes out even up to 273, 272, 273. From there, probably it may have a little more potential to start going up. So we need to be careful. After the result, it has gone up, but we have to wait and see whether this momentum can carry it much further. So the last few days, if you see the results which have come out, generally the pharma sector has done well. Some of the mid-cap stocks have also done well. So we should focus on those stocks on dips right now. So if you want any individual stocks to be bought, then we should look at stocks which have delivered good results. And those, either you go for that particular sector or we go for stocks. Now what we have seen is that very clearly the Nifty Pharma and Nifty Mid Cap has the capability to rally another 5% very easily. So what we should do is that 5 to 6, 7% next quarter or so we should concentrate, and then buy on dips, and then when we get 5 to 7% profit within a month or so, we should get out of book the profit, and then again wait for a dip to buy. Okay. So this is what. So what is important is topping and bottom. Okay. Divergence between the oscillator and price will be helpful for you. Second thing is that when you look at the divergences in the case of a daily chart, it may not come that easily, but in hourly chart you can spot it out clearly, which means which will give a very good trading position. So if you want a trading position, look at the hourly chart for divergence. If you are looking for big positions, then look at the divergence chart in a daily basis. Okay. So if you have any questions now, please ask me. So, no further questions, I suppose. So, we shall see you again next week, and wish you all a very, very happy Diwali and a very safe Diwali. Thank you very much. Bye. Good night.